This is the closing market report for Wednesday on the Iowa Agribusiness Radio Network. I'm Riley Smith. On the phone right now with Bill Moore of Price Futures Group as we wrap up another day in the ag marketplace. Bill, what have we seen going on in the grain and livestock markets today?
Well, it's an interesting day because the relationships between the grains and the energies and what Trump posts on his Truth Social seem to be changing. Initially, when the war started, the grains moved in lockstep with energy. Energy being higher, that grains were higher. Almost you could overlay the charts every day. And then the market built in a pretty good war premium off that. And now there's indications that the war is settling down and narrowing down, and maybe there's a peace deal in the works in the next week or two. And so you expect a war premium to be taken out of the greens, and it has been recently. If you look at July corn, it reached a high in late March of 485, and today or earlier 2 or 3 days ago went down to 450, so a 35-cent break. So indeed, it did take a lot of war premium out. But now the market seems to be reveling at the possibility that the war is at an end. The grains are up today. Corn's up 8. Beans are up 10. And the wheat actually, in spite of the rain in the west, in the wheat belt, is up a couple cents. Key to this, I think, was this morning, the latest post on Truth Social from Trump said that China would be very happy about the reopening of the Straits of Hormuz. Also, that China said they won't be selling arms to Iran. So this all bodes well for U.S.-China relations in front of the Trump-Xi summit in Beijing next month, and the market seemed to embrace that. The grains did, rallying, even though the crude oil is well off its highs, and as Trump indicated earlier, it was indicated earlier in the news, second round of peace talks between Iran and U.S. seem to be scheduled for later this week, with the hopes that they will reach some kind of compromise in the war that I think most people want ended. So the relationship is kind of turned around, and now the war seems to be applauding. The grains seem to be applauding the end of the potential end of the war, with an strong update across the board. 8 up in corn, 10 up in beans, and up about 2 cents in the wheat. So that's the latest development as I see it. Exports continue to be good. We do have export inspections tomorrow. Monday's inspections were good, over 1 million metric tons in corn per usual. Tomorrow, corn expected to be 1.3, 1.4 million metric tons. There was a flash sale of corn to Mexico, over 300,000 metric tons yesterday, spread over 3 years. That was positive news. The U.S.-China Beijing summit coming up was support for the grains. One result or ripple effect from the war, possibly winding down, is the U.S. dollar. U.S. dollar is a key to exports. Of course, for the lower the dollar, the better the exports. And the dollar right now is unchanged. But if you look at the chart of the June dollar, it's come up its highs 250 points, almost 300 points since the beginning of the month. At the lowest point it's been since March 1, and this is very positive for the grains. So that's another fundamental look at. U.S. planting is going pretty well, off to a good start at least. We've got corn 5% in, beans 6% in. Normally it's 4% and 2%, and spring wheat up 6% in. So those are positives. And that's pretty much the story today. So should the war wind down, the fundamentals to look at going forward will be the U.S.-China summit next month in Beijing and the U.S. growing season. There is talk of a super El Nino. It's been very dry in western wheat belt. It's driven wheat up recently. Just creeps into the corn and bean acres, then that's going to be an impact. And finally, this cost of gas, the fertilizer is not going to go down right away, even if the war ends tomorrow. The high price of fuel, the high price of fertilizer, the shortage of fertilizer is going to impact the acres. They could be well lower than what the government said they were on March 31st. and plus putting less fertilizer on their crops could mean lower yields. This could impact the final production when it comes out, at the end of the harvest. So all those things to look at going forward. Livestock-wise, we're looking at a market that's more than anything else reacts to the stock market. Today, the cattle is kind of unchanged. The hogs are a little bit lower energy prices, which we've seen in the crude. If you look at the chart of the crude market is currently up a little, but it's down about maybe $20 from its highs. That's good news for the livestock, as if it needed any more good news. But the cattle got a little overbought. If you look at the June cattle chart, it's made new contract highs the last 2 days, and today it didn't. I think it's a little overbought. The fundamentals are sublime for cattle. That's why the market has rallied $25 since the early March. Tight supplies, good demand, hard to argue with that equation. And the startling thing about the meat complex is the total divergence between cattle and hogs. Once again, you can turn the cattle chart upside down. You got the hog chart. Usually they go together. But this time around, the consumers preferring beef well over pork, with cattle just off contract highs almost every day at record levels. And the hog market can't get out of its own way. A quick look at the June hog chart shows a market that's made new lows for the week, every day this week. It's the lowest now it's been going back to before the beginning of the year. The pork demand just not there. People really are showing their preference for steaks and burgers over pork chops, and supply is plentiful. Hogs continue to be very weak, much of a weak sister to the record-breaking cattle prices as we go forward.
All right, Bill, lots of great information today. For anybody who would like to get in touch for more marketing information and check out your newsletter, how can they do that?
630-947-5176, wmore@pricegroup.com. Check out my newsletter, Agmaster, or www.pricegroup.com, the company website. Look at the bios, Jack Scoville, myself. We've both been there a long time. We'd love to help you out.
That again was Bill Moore of Price Futures Group. We'll look at the numbers next.
In rural Iowa, you need reliable information. The Iowa Agribusiness Radio Network brings you ag-specific content like market trends, weather outlooks, and policy updates that matter to your operation, while your local station brings you community news and consistent updates on what is happening in your area. It's a partnership built for the challenges of rural life. Your farm, your local station, and your friends at the Iowa Agribusiness Radio Network, where Iowa Ag matters. Find us online at iowaagnet.com.
At the close, May corn up 8 1/4 at $4.51 1/4. December new crop up 7 1/2 at $4.78 even. May soybeans up 9 even at $11.67 even. November new crop up 10 1/2 at $11.54 1/2. May soybean meal up $4.70 at $3.34.40. May soybean oil up $1.16 at $67.60. Chicago wheat up 1 3/4 at $5.93 3/4. Kansas City hard red winter wheat up 2 3/4 at $6.25 1/2. Minneapolis spring wheat up 1 1/2 at $6.39 1/2. May oats up 1 1/4 at $3.45 3/4. On the Merc, April live cattle up 5 cents at $2.52.60. April feeders down $2.37 at $3.73.50. May lean hogs down 15 cents at $94.07. May pork cutout went unchanged at $108.77. April Class 3 milk also went unchanged at $16.97. That's been a check of the closing market prices. Thanks again to Bill Moore of Price Futures Group for joining us today here on the Iowa Agribusiness Radio Network, where Iowa Ag matters. I'm Riley Smith.